Ladies and gentlemen, good day and welcome to the ZF Commercial Vehicle Control System India Limited Q3 FY2024 conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Batlivala & Karani Securities India Private Limited. Thank you, and over to you, sir.
Good morning. Thank you for joining us today, and welcome to ZF Commercial Vehicle Control Systems India Limited quarterly earnings call. The third quarter earnings and 9-month results for FY2023-24 will shortly be presented by the management team of ZF Commercial Vehicle Control Systems India Limited, formerly known as WAPCO India Limited. Your host this afternoon from ZF Commercial Vehicle Control Systems Limited are Mr. P. Kanniappan, Managing Director, Ms. Shweta Agarwal, Chief Financial Officer, as well as Mr. M. Lakshmi, Company Secretary. I will now hand over the call to Mr. P. Kanniappan, who will provide you with further insights into the results. Over to you, sir.
Sir, you may go ahead. Your line is in the talk mode.
Sorry, yeah. Thank you, Mr. Jayaraj. I warmly welcome you all to ZF Commercial Vehicle Control Systems India Limited third quarter results and 9-month performance for financial year 2023-24. Certain forward-looking statements that we will make today are based on management's good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations because of many factors. ZF Commercial Vehicle Control System India Limited results for the quarter and the period ending December 31, 2023 were published on January 30, 2024. They are available on the www.zf.com website within the ZF CV India Investor Relations section. We hope that you have had an opportunity to go through them. A transcript, recorded audio of this call will also be made available on www.zf.com under the ZF CV India Investor Relations section. Let me begin with the business update. Industry and economic updates. I would like to share a few macroeconomic aspects that are relevant to our industry and GDP growth. India's economic growth, represented by GDP, is expected to grow by 7.3% for financial year 2023-24, from the earlier projections of 6.5, according to the latest release by the National Statistical Office, NSO, source RBI. With a strong domestic demand conditions, and India remains the fastest growing major economy and is now the 5th largest economy in the world. In purchasing power parity, PPP terms, India is already the 3rd largest economy. The International Monetary Fund, IMF, has projected that India's contribution to global growth will rise from the current 16% to 18% by 2028. Strong domestic demand remains the main driver of growth, although there has been a significant increase in the Indian economy's global integration through trade and financial channels. Higher reliance on domestic demand has cushioned India from multiple external headwinds. India's consumer price index, CPI-based inflation, is in the range of 5.7%, edged up from November 2023 level, influenced by food inflation. The index of industrial production, IIP, slowed sharply to 2.4% on year in November 2023 from 11.6% in October 2023, a major drop in the manufacturing sector. Future industrial performance trends will be influenced by, number one, government strategic adjustment of capital expenditures to stimulate growth in the upcoming budget. Number two, the rural demand may remain weak this fiscal, with agriculture and allied growth estimated to have slowed sharply to 1.8% from 4.4% last fiscal. After the Kharif crop was impacted by an uneven monsoon, Rabi sowing is also lagging owing to lower reservoir levels and delayed sowing. Commercial vehicle production, there is more than 6 ton capacity in the third quarter of financial year 2023-24 was 104,025 units compared to 95,427 units in the same period of the previous year. This represented a growth of 9% and was largely driven by increased government spending, robust replacement demand, and strong end-user sector, notably construction and mining. The growth is expected to continue in Q4, followed by Lok Sabha elections, which may have an impact on the CV industry due to restrictions in government spending. OE sales performance. Against this vehicle production growth of 9%, we registered a OE sales in Q3 of FY 2023-24 of 483.1 crores compared to INR 405.8 crore in the previous year. This equals to growth of 19.1%, with a market outperformance of 10.1%. Now the key elements behind our growth story are penetration of pneumatic and hydraulic ESC in applicable bus platforms. Regulation in place with effect from April 2023. Increase in penetration of trailer lift axle control systems. Increased EV bus production by about 32% over calendar year 2022. The sale of EV aggregates like e-compressor and EBS is increasing for us. Now, turning to our aftermarket performance, the company achieved moderate growth of 10.2% in Q3 2023-24 versus Q3 2022-23. Various initiatives driven by management are helping to consolidate our position in the aftermarket, namely introduction of 4 more new authorized service centers and 4 new prime dealer accounts to provide better access to the end customers. 20 van campaigns and 18 canopy campaigns conducted across the nation to improve secondary sales of focused products. Tire pressure monitoring system, the trailer pulse, successfully demonstrated to key customers. Trailer segment has grown by 32% year to date, with the continuous engagement with the major manufacturers who transport chemicals and hazardous goods. Export of products. The company has registered lower export sales in Q3 of FY 2023-24 of 204.2 crores compared with 282.7 crore in previous year, a drop of close to 28% due to order book reduction of 127 crores seen globally due to inventory challenges. However, our export business is expected to gain its momentum of robust growth in Q4, Jan-February-March 2024 period, due to the following. Order book flow improved better versus Q2 2023, which was an all-time high. The new actuator, 4.0 actuator, product and line release audit by Volvo on 23rd of January 2024 has that is completed. That is expected to add another 2 million euro sales. Key customer visits: Daimler Truck AG SOP audit in February 2024. Yoast Trailer India team, they are all visiting and then releasing our lines. However, ongoing geopolitical situations and various other disturbances in the Red Sea would increase the lead time by about 3 weeks, which will in turn have an impact on the export of goods. Export of services. With the continuous expansion of our capabilities and talent acquisition, our export of services registered a growth of 32.4% in Q3 of FY24 compared with the same period in the previous financial year. Engineering. I'm happy to share with the team that the company received the ZF Excellence Award in the ZF Way category from the group and was one amongst the 56 projects that were submitted in that category globally for our in this category. And our team delivered this through a cross-functional team approach, comprising of members from engineering, purchasing, manufacturing, validation, etc. We were also the finalists at the commercial vehicle solution divisional level for the category of sustainability. Our engineering team launched advanced technology projects like electronic stability control for pneumatic and hydraulic, and has made some SOP ready. Ecotronic MIG 9-speed AMT is launched successfully. Significant progress has been made in promoting advanced driver assistance systems in the country, and a collision mitigation system has been launched for a leading OEM in India after extensive field testing and performance fine-tuning for the India market. Electronic braking system for the EV bus segment is launched. Gen 2.0 e-compressor is applied to all the Indian OEMs, and the field quality is improved for robustness. India's R&D footprint is aligned with global engineering for significant growth and accountability shift for the India team. Manufacturing facilities at Oragadam. As we outlined in the previous earnings call, the construction of our factory at Oragadam is progressing as planned. Validation of the manufacturing lines are in progress. We will continue to update you on its progress in future calls. CSR outreach. At ZF Commercial Vehicle Control System India Limited, we strive to be a responsible corporate citizen and make a positive difference through our CSR initiatives. Our CSR initiatives are based on 4 tenets: improving road safety, enhancing the quality of life of neighboring communities, contributing towards environmental sustainability and skill development. Over the years, our contribution to society has touched thousands of lives in several ways and benefited a wide range of stakeholders. The scope of our initiative has now been expanded to make a positive difference to even more stakeholders. Through our skill development and community support initiatives, the company has contributed computers, advanced fitter and welding lab, and a soldering lab for government polytechnic, respectively, in the remote villages of Barabanki, which will benefit 887 students. As part of our sustainability initiatives, the company has installed 2 numbers of solar high-mast lights, 15 numbers of solar street lights, and a solar-based traffic light in and around the company's plant. As part of our continued support to the community, the company has also installed solar power systems at the primary health centers in a few villages in and around our test track facility, and contributed medical equipment to one of the primary health centers. As a responsible corporate citizen, the company also contributed relief materials to the Greater Chennai Corporation for distribution to those affected by cyclone Michum to the tune of 20 lakhs. Awards and recognition. The company has been recognized and received the Gold Award from Hensei Kaizen Institute for its ESG performance. Our employees won 2 Gold Awards in the QCFI, Quality Control Forum of India, chapter level QCC competition, a Platinum Award in the AOTS National Level QCC competition 2023, a Best Presentation Award in the NIQR QCC Case Study competition, Platinum Awards and Gold Award in the NIQR National Level Six Sigma competition 2023 under various categories. Also, the employees from Jamshedpur won first prize each in the safety and delivery category, and one more second prize in quality by participating in the Auto Component Manufacturing Association Eastern Regional Kaizen competition. The employees of the Mahindra World City plant won first prize in delivery category in the Asma Southern Regional Kaizen competition. Other employees of the Ambattur and Mahindra World City plant won four gold awards under various categories in the QCFI state level SIT and CFT supervisory improvement team and cross-functional team competitions. And now moving on to our financial performance for the quarter. For your ease of reference, the results were made public at 4:27 p.m. on the 30th January 2024. I hope you have had a chance to go through that. Commercial vehicle production, more than 6 tons, registered growth of 9% over the same quarter in the previous year. We outperformed the market by 10.1% this quarter. Our sales to OEMs in this quarter was rupees 483.5 crores. This is 19.1% higher than the prior corresponding quarter. Overall strength in demand ensured that our aftermarket sales were moderate, 10.2% quarter on quarter to 109.8 crores. Export of goods resulted in an income of 204.2 crores in Q3 of financial year 2023-24, with 27.7% lower than the prior corresponding quarter. Our engineering and other services continue to provide very strong value to our customers across the group. The growth in service income is very healthy, 32.4% quarter on quarter. For the quarter ending 31st December 2023, we achieved a PBT of rupees 135.4 crores, which is 17% of our sales. This is an improvement of 2.3% over the same quarter in the previous year. We have improved our profitability by 1% sequentially over the previous quarter. As we present the results, we see that the series of actions which were put in place by the company to mitigate the challenges posed by inflation and other aspects have yielded strong performance results. While the results have been aided to a small degree by the positive effect of foreign exchange fluctuation, a gain of rupees 9.7 crores, we still see the strength of performance continuing to grow. Thank you. We now welcome your questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mumuksh Mandisha from Anand Rathi. Please go ahead, sir.
Thank you so much, sir, for the opportunity. So starting on the freight cost, sir, I mean, freight cost is about 2% of the revenue, and we have about exports about 30% of revenue, and we also do some imports at 10% of the revenue. So how do you see the impact of the freight cost on our numbers? Will it be a pass-through to the group companies, or will we have to bear the impact, sir?
Freight cost, huh?
Yeah.
Can you say it again? There's some.
I'll just repeat, sir. So I want to understand what are the exports we do, the freight cost, the increase in freight cost, we would have to bear it, or our group companies would bear it? And secondly, even the imports which we do, the impact will be on us, or it will be not on us, sir?
Yeah. So generally in the export-import area, the contract is on exports. When we import, we bear the freight cost. And of course, when we export, the concern, our sites, our intercompany plants, they pick up the material. That's a contract. Largely, that could give you exceptions, but then largely this is the same model. Now, what is really happening is, whenever there is normally we go through the sea shipment, but then there are sometimes possibilities when the market fluctuates, we also pick up some item by air, and that only can marginally change. But then if it is because of the customers, if they have not projected the demand or predicted demand or highlighted it to us, then we go to the customer and ask them to compensate. If it is a case of for some logic, right now we have some challenges because of the Red Sea impact and all that. If it is going to lead to an additional time and sometimes we have to pick up by air, we decide to absorb, or it depends on we have a strong case to go to the customers, we also do. But largely this is the framework.
Understood, sir. Sir, just on the export side, I mean, globally the commentary from the OEM side, Volvo is talking about 15 to 20% fall in the Europe and North America CV market. So considering that there will be a fall next year, what's your outlook based on the order book? What kind of outperformance you see, or what kind of growth exports can see considering the fall in the CV market?
Yeah. So we are right now seeing market is quite upbeat for us. At least next 3 months, we have got clear indications from our customers or intercompany customers. But then, the last quarter we faced one scenario that which demanded that, strong focus at the global level to reduce inventory. So many of our sites decided to reduce the pipeline stock. That led to a situation that we need to, reduce our production. But that was within ZF, that's the main major issue, because as a company, as a group, we decided to focus on cash generation and reduce the inventory. So that has some impact, but that's a very, I would say, it's a short term. So now orders are back, and we are working to our full, capacity now. I see the same situation to continue at least for the next up to March. But then our sales from my earlier communications we have realized we are actually, it's so widely spread. Actually, it's not to specifically one customer. Also globally, also we are supplying to trailer segments. Overall, globally there could be some challenges the way I look at it. But then we are also working on projects. Some of them will get launched as we move forward. Particularly this year, in the middle of the year, we'll start supplying compressors to Daimler Truck Global, Daimler Truck AG. So like that, some few actuators lines will get released. So right now the outlook is, I would say, quite positive for the first quarter. Then we have to see how the evolving situation, because there are a lot of geopolitical crisis, and that may have an impact on some of our demand, but we are closely monitoring that.
Got it, sir. Just a last question from my side. So in this quarter, OEM per unit has increased from to 46,000 per unit in Q3 versus 44,000 last quarter. Any reason for increase, sir? What we saw in this quarter, any content increase we saw?
Yeah, so there are a few trends that are happening in the commercial vehicle industry now. One is transition to EV vehicles. Now more and more buses the bus production is electric vehicles are being produced through the FAME and other route. And our content per vehicle is quite high there, because these electric buses are, and the brake system is we're having electric compressor, which is in terms of value per vehicle, it is very high, at least about, I would say, more than 10 times of what we currently do with the mechanical system. Then we have electronic braking system. In this, the normal braking system, mechanical braking system is of the order of about content is 15,000 rupees. But now we are in these electric vehicles, there's a delta component that comes by way of electronic braking system. This electronic braking system helps, regeneration and energy efficiency in the braking circuit, and that leads to a vehicle efficiency improvement and increased that can be covered, etc. So most OEMs are fitting electronic braking system in all the EV vehicles. Also, there's a regulation which calls for electronic stability control. Electronic stability control for the bus segment. Again, adoption is quite high as of now, even though there are challenges at the beginning. So all these things add to increasing content. When the full-fledged market moves more of these vehicles, we are still today, even now, it is much lower percentage electric vehicles. But as the market moves more and more to electric, this content per vehicle also will keep improving.
Got it, sir. Just follow up on this question. So who would be the major EV players for us, EV customers?
It's all bus producers. Right now, what is happening in India, the buses are being produced based on the tender program from the government. So, the traditional OEMs, big OEMs like Tata, Ashok Leyland actually using the switch mobility route. And then, of course, Volvo iShare plays. But we also have new players getting in. You have, some Y Electra, Photon, PMI Photon, and JBM. These are all the new customers, even Ika Mobility. So some customers who got JV as an arrangement with China, they still source some of the parts from there, but most other OEMs we supply from India supply chain.
Got it, sir. Thank you so much for this.
Thank you.
Thank you, sir. The next question is from the line of Vimal Jamnadas Goyal from Alchemy Capital Management. Please go ahead, sir.
Yes, sir. Thank you for the opportunity. My question on exports has been answered. Just on outlook for the aftermarket, sir. It's been 3 quarters since we've seen a sequential decline in revenues. With the kind of product lineup that we have, we would have certainly expected the aftermarket to do much better than what it has been reporting. So, what is the outlook there, and what's what is hurting us over there?
See, aftermarket largely is again it's a function of the utilization of the vehicles and trucks in the field. Our general understanding is that while the diesel price is more or less stable, the freight rates are increasing steadily. I'm sure you also may be tracking, which means the profitability of the fleet and the utilization of the truck seems to be improving, which overall gives an indication that the demand for spares and other things will continue to improve. But there's another phenomena is the quality of products will also keep increasing in the market because customers are offering very large, meaning the warranty period has been steadily increasing, and suppliers are actually continuously improving the quality. So this will have a dampening effect. But if you see I'm not able to understand. You said about continuously we are reducing, but generally we are in the same pattern. Even in this quarter, we have increased about 10%. But okay, notwithstanding that, one trend is more opportunities to on the spare sales, and the other trend is quality improvement. So we need to look at new ways of managing our aftermarket growth. So what we do is now we are applying the analytics. Basically, we are trying to understand the field vehicles that are available, and then probably about 30 lakhs vehicles are there on the road with set of systems. So we have a responsibility to make sure those vehicles are serviced and supported. So for that, we are trying to calculate what should be our sales entitlement from each city for each type of vehicles and how much we are doing, etc. I'm trying to use this framework, try to keep improving. As such, there is still an opportunity to do. But at the same time, OEMs are also becoming very aggressive, and many of them want to do the service themselves. So this is the situation today. So the opportunity available to us are, one, getting into digital area. So you also know that we have got a digital solution that we do it for one of the OEMs, Volvo iShare, which means on the aftermarket side, we have an opportunity to really manage those vehicles for which we get a service revenue, the subscription route. We're trying to see opportunities to expand that to the fleet. So in the trailer segment, we see some opportunities to really introduce the digital solution, which I also made a mention that we are launching this Trailer Pulse. And Trailer Pulse is a digital solution from our side to connect trailers with the truck, and it can talk to the ecosystem and all that. So Also, the trailer segment itself is growing well, about 32% growth in the segment. Overall in the industry, now more and more trailers are getting applicated. And in the trailers, we also see technology adoption is happening. So our opportunity to maintain those trailers in the field with the customers, trailer customers, also a lot of things are opening up. We also see some more opportunities, but not yet realized. But it's retrofitment of some of the advanced technologies in the advanced driver assistance system type of area. So as such, if you see we have been growing only, not sequentially there has been some drop, but at a full year level we have been growing, and we see we will be growing continuously, but if not at a very at least 10 to 15% level we are planning to grow.
Understood, sir. Sir, your comments on the overall heavy commercial vehicle growth for FY25, are we getting any sense right now? If you could just comment on that, please.
So we are seeing, if you see last year, at the full year level, the growth was in the range of about 16%. It's a calendar year. But then, if you see this year calendar year, we see in our estimate only a flat type of market. But then we would like to grow through outperformance with the technologies. In our planning, we are only taking a flat market as such. But then again, we have to keep monitoring. We believe there could be some slackness due to the election, but we don't know. We do not know. So as we move forward, we can also constantly monitor. But as such, in our planning, we are taking more or less a flattish type of growth for this in the commercial vehicle.
Understood, sir. Understood. And so just one data point I wanted. The engineering services, if you could just help me with the absolute revenue for 9 months and Q3 for FY24. Thank you.
Yeah.
The absolute revenue, sir. Thank you.
I will request Shweta Agarwal to share with us. So.
Okay. Hello, can you hear me?
Yes, ma'am. Yes, ma'am. Please.
The absolute revenue for this quarter is 94 crores, and for the whole year is 280 crores on the engineering services segment.
280 and 94 crores. Thank you so much. Thank you so much, ma'am. All the best.
Thank you. Thank you.
Thank you, sir. Before we take the next question, a reminder to all the participants. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead, sir.
Yes, sir. Good morning, and thank you for the opportunity. My first question is on the exports business. Obviously, this quarter we've seen a decline, and you did mention that you have visibility of about a quarter. But my question is slightly for the next year, F25. I think last couple of quarters you've been mentioning about some new orders like the 564cc compressor for DAF and also exports to China where the lever for disc brake, etc. So these seem to be orders where we are substituting some existing manufacturing that's happening outside of India. So is it fair to still assume that even if the European and maybe the North American truck market is weak, we can still grow exports in this coming year because of us substituting some of the local manufacturing there?
Yes, okay. So actually, we always secure our export business through our competitive positioning within the organization. Compressors, some new customer is getting added. We were starting with originally Volvo, then we added DAF, and now Daimler is getting added. And so we'll continue to strengthen. At least conceptual framework. When we keep increasing our volume, our advantage on the scale and the cost that we are able to, cost improvement that we are able to offer, it helps us to really further improving our position, while the quality and other things are remaining same or improving. So that is one aspect. Second is, Now, Oragadam site will be in operation. I think we are planning to inaugurate on 14th of next month.
Okay.
That will start performing, and we are having some few products there also for export.
Okay.
Few products. Essentially, currently we are sourcing the product from a supplier globally, so that now the India team is able to demonstrate that it can be produced here more competitively. So, like that, we are identifying new opportunities as well. So, our growth will be driven by, the current products, whatever we are doing, and attracting more customers for the same product range, plus new opportunities. So, we are, of course, the team in India, we are trying to drive this growth continuously. Of course, there could be some headwinds occasionally here and there, but directionally, we are quite positive on that.
Mr. Muklesh?
Sorry to interrupt. Ma'am, the line for the current questioner is disconnected. So we move on to the next question from the line of Varun Arora from B&K Securities. Please go ahead, sir.
Hi. Yeah, sir, can you share the revenue breakup for OEM, replacement, exports, and others for the third quarter again?
Yeah, I would request Shweta to answer.
Do you want absolute numbers, sir?
Yes, sir. Yes, I'm sorry.
Okay. We have 483 crores coming from the OEM. We have 109 crores coming from the aftermarket, and 204 crores coming from export sales, giving us a total of 797 crores of revenue from products in the current quarter.
204 from exports, right?
204 from exports.
Okay, thank you so much. Sir, just want to ask on the employee cost, why it went up so significantly, and on the other side, other expenses came down. So any comment you can just...
Yeah.
Absolutely. So the employee cost increase that you see is due to the increase of headcount in our engineering services area. We have added a significant amount of employees over there, about 200, and that you would see also reflected into our engineering services income. So it's not a pure increase in cost, it is due to the increase in the services business of our company.
Okay. And this will be this percentage will be sustainable in coming quarters.
I'm sorry, could you
say it again? Yeah.
This percentage, this 13% percentage, so that will be sustainable in the next quarters also.
Yes, it would be.
Yeah.
This is sustainable.
Okay. And what led reduction in the other expenses, ma'am?
The other expenses, we have some reductions on data processing charges, rent, CSR, and repairs and maintenance.
Okay.
We basically have been actively managing our costs over the period.
Okay. Just another question on the margin. So now the margin is sustainable near the 15%. So can we assume that it would cross 15% margin in FY25?
Can you say it again?
So now your margins are near to 15% for the like 4 or 5 quarters consistently. So can we assume that it would cross 15% margin in FY25 or in the next quarter?
Yeah, that's the direction we are working. So I'm also generally communicating in this call that we are basically a continuous improvement company, not driven by our TQM framework. So we're looking at all opportunities to really keep improving, barring any untoward thing happen, but otherwise that's the direction.
Okay. Thank you. I'll fall back in the queue.
Thank you.
Thank you, sir. We'll take the next question from the line of Mukesh Saraf from Avendus Spark. Please go ahead, sir.
Yes, sir. Thank you for the opportunity. Again, I got disconnected. So on the exports question, so just as a continuation, like you did mention that next month we are starting with the Oragadam facility, and so we can see some growth. So any kind of target or any guidance you would want to give, like can we see double-digit kind of growth next year in exports? Any such indication that you can give?
Mr. Mukesh, generally work on logic that one side of our sales will be from export, and we have some pipeline of projects to continue to focus. Like I also highlighted.
Sure.
The thing. So we that's the direction we work.
Got it, sir. Understand. And I think on other expenses, you said that there were some cost-cutting measures, but we can still maintain this number of less than 100 crores quarterly, or there seems to be a one-time kind of reductions here?
There is no one-time issue. We are this generally in all areas we are trying to make the cost.
Okay.
I would
so we can maintain this number, so closer to 100 crore number we can maintain.
You mean the 100 crore is the
other expenses? No, the other expenses numbers, sir.
So I would
95 odd crores we have done this third quarter we've had.
There are no one-time impacts inside this other expenses that you see. These are sustainable actions taken, which would hopefully be able to be maintained over the next.
Yeah.
Got it. And just lastly, any update on the PLI scheme, sir? Because I think we'll be starting our production next month, and so any kind of update that we have there?
Yeah. No, Mr. Mukesh, actually the PLI calls for a certain level of quantum of capex investment. Also, it also demands certain top line sales outcome. When we are able to meet the sales numbers, we have not been investing so much on the investment side. So we have some challenges to get that benefit. But then we are looking at all options to see how we will get into it. But the Oragadam site anyway will get the corporate tax benefit because the new site we invoicing before March 2024. So we will operate at the 15% corporate income tax. So that's one thing straight away available, but PLI, we have to still see what more we can invest because they're also quite frugal in our investment. So that's the investment side.
Understood, sir. All right. Thank you so much. I'll get back in with you.
Thank you.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Thank you so much. So just had one more question, sir. What has been the capex for 9 months, sir, for this year, and what is expected capex for FY24 and 25?
Our capex for 9 months has been 130
crores. 138 crores. Yeah. See, 9 months has been 138 crores. If you see today, out of that, almost 40 crore we have spent for the new site. You can roughly estimate it should be in that range.
For the next year.
Next year also, this similar trend, because the new site will be operational. We are bringing many, production lines there. So most of the focus will be the new site going forward. Plus, of course, engineering, we are doing a lot of work, and then we are investing.
So if I get right, sir, it would be 140 was 9-month number, another 40 crore for Q4, right? That will be 180 crore.
In this year, that's what that number you can safely take. Right now, our indication is more or less a similar number will be there. Though there is a lot of pressure from initiative from global level to reduce our capex, not only for India but generally. So we are also looking at possibilities. But for our immediate indication too is you can assume that it will be in the range of around 180 crores per year.
Got it, sir. Thank you so much for this.
Sir, are you done with your question?
Yeah, done. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Viren Samir Deshpande from Alpha Peak Investments. Please go ahead, sir.
Hello. Good afternoon, sir. Sir, our growth has been very consistent over last 1.5 year, and we continue to see good in sales and profit margins also. But this time it was weak. I think you mentioned regarding inventories, maybe some were piled up, etc. But structurally, do we still expect the commercial vehicle industry to grow over the next 1 year, despite temporary aberrations due to political, that is elections, etc.?
Yeah. So what we are thinking, first is next 3 months we have got some indication from all OEMs, which indicates a decent growth. Meaning, you see, last year also January, February, March, the production has been quite good. My current view is this year it will be more or less flattish, and if the impact of elections, we don't know what type of impact, but there's some amount of uncertainties around that.
Construction and mining, I think, are doing well, no? Industries as such.
Yeah. So that's why our construction and mining is strong. Overall industry is strong. As I told you, while the diesel price is more or less stable for more than a year, the freight rate is increasing. Which means the profitability of the fleets are there and the utilization of the trucks are there. One thing. Another trend that is happening in the market is the movement towards using the trailer has become more profitable. Usage of trailer-based transportation in the haulage also has been very aggressively increasing. What used to be about 8% of the overall truck production used to be the tractor-trailer combination. But now it is almost 17%. We see this will keep growing like any other global markets where it's in the range of 60%. That provides a lot of opportunities for us to grow because we can sell products for the truck. We can also sell the products for the trailer. And globally, our farmer WAPCO, which is a part of this set of CVCS in India, we have highly advanced technologies for the trailer segment, more than anybody else. So we have the trailer EBS, trailer electronic braking system. We have the trailer ABS. We have lift axle control systems and many solutions.
Yes.
And so the last quarter trailer segment grew 32%, I think. So that's why it's a very strong growth in that segment, and that is something that we are also factoring in our thing. Also, we have the digital business, which close to some 80-90 crores now we have built in the last 2-3 years. Which was almost zero in 2020. Now we have come to, I would say, about 80 crores now. But we are seeing almost 160,000 vehicles are in our platform. And there, because we are connected with one of the OEMs, more and more vehicles produced by them will go with our system, and the number of vehicles in our platform keep increasing. Okay. Again, there, if you offer many new solutions, then there's a possibility to upsell and then subscription we can improve. That capability also helps us to go to the fleet directly in the aftermarket side, etc. So many areas we are working. Yes. So the vehicle production itself, it could be, in our planning, we are only taking it flat. How it will move up or what we have to constantly monitor. And the uncertainty here is the impact of election and other things. The government has to stop investment for some time and all those things. So, but our growth will be driven by outperforming the market. Yes. At least we believe we'll do about 10%.
Like in this quarter also, you mentioned we have outperformed the market despite the growth in sales being muted, only 2-3%. But we still have outperformed the industry by 10%.
Yeah, correct. So 10% we outperformed. The market grew about 9%. So in the OE. So that opportunity is available because that is, our growth is largely driven by our technologies and the solution that we'll be offering to the market. We are seeing the early signals on the AMT, getting launched by OEMs, and the market is giving very positive signals. Again, we'll watch, we'll see, but then we are well positioned to drive growth through that route as well. So there are multiple things happening which will help us to really manage certain decent growth in the market.
And we are actually increasing the content per vehicle, etc. That is also going to help us going forward.
True.
And when is our new plant going to be on track, commercial production?
Yeah, the new plant is already in place. We have moved. We are validating some of the lines. Line will be released soon on 14th of this month. The plant formally gets inaugurated, and that will start also, adding to our sales.
Okay. Good. Okay, and a replacement market is not a big thing for us.
Actually, replacement market is. You see, we have done about, in the last quarter, about 109 crores out of 700 and something. So, that's a kind of a 12-13% out of sales. But the opportunities are there, but also there are some headwinds. Headwinds is essentially the OEMs are trying to, take that part of the business. That's a challenge we have to manage. Mm-hmm. At the same time, of course, we are also supplying through the OEMs on the OE spares route also to them. But then they will try to more and more reach out to the customers. And many customers, what they do, they want the trucks to go to their dealer points only. All those things are happening. But beyond the warranty time frame, we have an opportunity to work with them. So certain headwinds, certain tailwinds. You see, the growth is also around 10% in that area. But again, we are launching some new products, some digital. I told you on the digital side also we are working.
Yes.
Yeah.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you, sir. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing remarks.
Thank you very much for the very, very good interactions. Thank you.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.